So you remember this? It was very, very casual, very like off the cuff. It was just, and then we edit out the parts that we don't like.
Yes, yeah, that's
so.
great.
And how do you? I'm gonna butcher your last name. How do you pronounce your last name?
Well, if you're French, you say Deverteuil.
Oof.
But if you're just regular Canadian like I am and everybody else is, you say Diverti.
Diverti.
Yes.
Okay, we'll have to get the spelling correct on your show when we do the lower thirds on that. So, Anne, welcome to the show.
Thank you.
And Anne you're welcome. And Anne is a bookkeeper extraordinaire, yes?
Yes.
With a specialty in startups and a specialty in subcontractors. Now, we have a couple of special points that we want to talk about tonight. And I see the first one is audit proof your business. Explain that. What is that?
Well, you can't actually audit proof your business because if you're in business long enough, you're always going to get audited. Everyone gets audited. But there are things you can do to make sure that if the auditor comes knocking at your door, that it won't be a terrible experience.
So I've been through an audit and it was it was a horror movie that just did not quit. Tell me, what steps do we take for audit-proofing our business? Is there, off the cuff of your mind, what is the first one?
Well, the first one is make sure you have really good books and that things are very organized and orderly because when the auditor comes, if they can see that things have been done correctly, that things are in order, they don't look as hard. When they start seeing odd things, then they really start to dig. So that's one of the things to do. Make sure that you have receipts to back up absolutely all of your expenses. That's really important. And one of the things that people don't realize is that you have to have your original receipts, not just that little credit card slip. And that's especially true with restaurant meals. Everybody loves to just give you that little slip.
Yes.
And doesn't even always show how much the GST is on it or how much the tip was. That's not good enough. CRA wants to know what you ate. They want to know if that $300 dinner expense was for 6 people having a reasonable meal or 2 people and they ordered a $200 bottle of wine and they're not going to let you do that.
Ouch.
If all of your clients are very high earning people that would expect a $200 bottle of wine, you would probably be able to do that. But the average person, no, they're going to say that is not reasonable, and they're going to say this is not a legitimate business expense and throw it out. So you've got to have the actual receipt. You've got to put the name of the people or person that you were eating the meal with. You've got to say what relationship you have to them. Are they your customer, your employee, a business associate?
More information is better, yes?
Yeah, well, you have to have those things. You must have the name of the person, their relationship to you. So are they a client? Are they an employee? Are they a partner or another shareholder? And what did you talk about? They actually expect all of those things in addition to the actual receipt, not just the credit card slip, which is what most people tend to give me. They give me a slip and it says customer meal. If you get audited, CRA could just laugh at that and throw it out, and they're going to say, too bad, so sad. We are not accepting any of these expenses. And you're going to pay tax on all that additional income.
You throw a lot of that income out the window,
That's right. That's right.
That money that you could gain right out the window, right?
Yeah.
That's got to hurt.
Absolutely.
And tell me something, in your opinion and in your experience, how many people don't do that? I mean, how many people leave money on the table?
Oh,
30%, 40%? When they
not putting the correct information on the receipts, I would say 95% of people really do not keep track properly, particularly restaurant meals. That's one of the worst things. And of course, then the other one is the mileage log. It is, if you have a vehicle that you use for business and personal, you have to keep track of your miles. And I'm in the same boat as everybody else, and almost nobody does it. And CRA knows that. They know that people don't do it, and they do insist on it. Now, they've just come up with a ruling, I believe it was in 2010, saying that you can use 3 months log to be representative of an entire year. Ooh. I don't have all the details on it. I believe you're supposed to keep 1 full year, and after that, each year you can just do 3 months and they will consider that if it's representative.
Yeah, but you've got to be meticulous that first year, though, right?
You really do, and very few people are. Everybody is guesstimating and almost everyone is guesstimating wrong.
Oh, man.
So, and we think it's okay because we haven't been audited. Everybody thinks it's fine. Okay, no big deal. If you get audited, they're going to throw that out. And you're going to pay tax on the value of that, because if they don't allow that expense of $6,000 of vehicle expenses, that immediately becomes income, and you owe tax on that $6,000 that
And
they just said.
Yeah, and you will
know.
learn the hard way.
Yes, it's
Yeah,
very
unfortunate.
painful. It's very painful.
I know all about
And if
that.
you get audited once, sometimes you'll get audited again.
Yeah, because it raises the flag.
Yes. If they found that your books aren't in order and you've been doing things wrong, then they are likely to come back and check to see if you're doing it right. If they come and audit you and everything's in order and they don't have a problem with anything, then you're probably not going to see the auditors again, possibly ever.
Really?
Yeah, they don't really want to audit you. They're looking for people that are actually doing things wrong.
Nicely done.